look at this crew. Welcome, everybody. This is long overdue. It's finally time for a live market roundtable with my four favorite people in the world. We have Scott Redler, Sami Abusaad, David Prince, and JR Romero, who all run VTFs for T3 Live, and we are here to straighten out and figure out what is going on in this market. So how is everybody doing today? Scott, how are you feeling?
It's Friday, so and every day above ground is a good day. So today's a good day.
Okay, David, how about you? How's the market treating you?
Market's treating me great, and like Scott said, I'm alive, healthy, no complaints.
Okay, Sami, how about you? How are you feeling?
Feeling great.
JR?
Trades work today, so.
All right, JR, how are you doing?
I'm just peachy, buddy. Good day in the market.
Okay, excellent. All right, we're going to get to our little program here, but while we're waiting, we have about 500 people in so far. We're letting the chat fill up. Let us know where you are from. We're just curious where everybody is from. Just type it in the chat and help spread the word. If you're on Twitter, like, retweet, comment. If you're on YouTube, like, comment, and subscribe. So today's program is going to be a little different. Since we have this big crew, we're going to play a little game called Two Truths and a Lie. We're going to talk about what's going on in the market. Are going to talk about the AI boom, what traders need to change, do better, and everybody is going to share their favorite ideas. So we are playing a game called Two Truths and a Lie. And our expert traders here, they will participate, and so will the audience. So I've come up with a demented question to see who knows what in the market. So I'm going to make three statements. One of them is a lie. I don't think any of you guys are going to get this. Okay, so I put three statements on the screen. One of these is a lie. The S&P 500 is 503 stocks. NVIDIA is the number one name this year, and Broadcom AVGO is the number one S&P 500 stock in June. Just blurt it out. Which is the lie? And if you want to participate in the audience, let us know.
I'd say number 3 is the lie.
I don't want to just jump with him, but that was the one I was going with. Broadcom feels like the lie to me.
Especially if you like you calculate it from June 21st right now, it's definitely not the number one, or maybe it is.
I would say NVIDIA is the lie.
I thought A&F for a while, but I'm going with 3. 3's because didn't A&F, wasn't it like somehow in the S&P? Or am I crazy? Anyway, Broadcom, I'm going with number 3.
Okay, JR?
I don't know. Can I follow a friend? I'm going to go with AVGO. Doesn't seem right.
Okay, all right. So the lie is number 2. NVIDIA is the number one S&P 500 stock. It's the number 2. Yeah, this is the lie. SMCI
Somebody got it right.
Actually, yes. Sami, you are the king of today. There's one loser. There are no points for second place. This is just like Top Gun.
What does he get?
He gets the title. He gets pride. He gets the feeling of knowing he's the absolute best. Okay, all right. So enough fun and games. Let's move on to the real stuff, which is the market. So Scott, yesterday, a lot of fanfare. We saw you on with Liz Clayman at Fox Business talking about the semis. So what's your sense of the mood out there? You came out bearish on the semis yesterday morning. What do you see going on out there?
Well, we have that rule. If you start hearing about the semis 8 times an hour on any TV station, the trade's getting crowded. Besides, using our day count rule, besides using RSI. And bottom line is yesterday, as a trader, my antenna went up. A lot of people have been trying to short some of the semis. And finally, yesterday, you and I came up with overheated, crowded. That was the title of the note. And everyone had a lot of ways to make money there. You could have been long the semis and sold it at the open and made a lot of money. You could have been a seasoned trader like most guys here on this panel and shorted NVIDIA. You could have shorted the SMHs. You could have bought puts. You could have done whatever you wanted yesterday and made a ton of money. So at this point, it kind of probably puts the semis a little bit into a rebuild type phase where you'll get like a long versus a low like you had this morning, and then you'll get some retrace bounces. But I would think for the next 4 weeks or so, I would say the top of the SMHs and NVIDIA are in, and that's my call, and I'll stick to it. But as a trader, I'm very flexible.
Come on, Scott. Okay, all right, David. I saw you were.
Wait,
It's
that's
in-
the top in NVIDIA. The SMHs are in for at least 4 weeks.
4 weeks. Okay, we got it. Top is in for 4 weeks. Okay, David, sometimes I feel like you're addicted to trading NVIDIA and SMCI. So based on what I see in Inner Circle. So what do you think is happening right now? What's your sense of the mood?
I think you have to be, I said it earlier to you, I think you have to be somewhat of an artist. And in other words, don't paint all of these stocks with the same paintbrush, right? They're not all the same. So what I mean by that is I 110% agree with Scott, right? NVIDIA rules the show, and it showed some overheated signs, being at 83, 84 RSI. And my very first trade, to show how much I agree with Scott, was actually shorting ARM Holdings pre-market yesterday, right? 85 relative strength, way overdone. So, but underneath, I also looked at it and I said, if there's anything I want to be long, I'm pretty sure that that AMD, which is on an earnings basis, not a cheap company by any stretch, that AMD is more valuable today than it was yesterday, based on NVIDIA at 140 and ARM hitting 175 and Broadcom hitting 1850 or whatever it was. And now AMD might play catch up. So as much as I agree, I don't think it's just like risk off. I think you can kind of look underneath and find spaces. When it comes to NVIDIA, and they're somewhat predictable. They follow good chart patterns. SMCI was once upon a time dirt cheap. It's still kind of cheap. So it gives us those areas. But SMCI is a great example. You know, a week ago, I said, wait a second. If NVIDIA keeps going up every day, then SMCI is now becoming too cheap, and it's got to play catch up. So we're pretty aggressive at $800, and you know, I no longer have it now. So I agree with Scott. We might have topped out, but underneath the hood, there are some semi names that maybe lag this whole move that are going to be buyable, much like AMD was yesterday.
Are you long?
Okay.
Can I ask a question, Michael? So,
I don't
Prince,
have
are
a
you
Scott's
long
the boss.
AMD now, or was
I am
that
long
done
AMD
yesterday?
now, about 20% of what I had yesterday, right? Like yesterday was a blockbuster day with AMD. I assume you were in it too. And now I'll play around with it. I think I bought and sold it 5 different times within, like, it pulled back 159. I bought more yesterday. Sold at 162, 163. Not all of it, some of it. Bought it again, 160. Sold some 160. I think I did that 4 times. If AMD went to 155 today, I wouldn't even notice. But at least is possible that maybe it can inch up and try and tap that 170, possibly in between. And I'm never like all in or all out. So I feel like, an example, if I'm shorting ARM and buying AMD, I kind of have a hedge too. So if I'm wrong, I'm still short the right stuff. Also, yesterday I had a bunch of Q puts and I had Q short as well. So my point is, when I'm going long, it's where I think maybe something could be work even underneath things. Last thing I'll say is I actually felt pretty strongly about buying Apple yesterday, right? And I bought it 210, 209s. And then this morning, I was pretty happy. It was almost 212 pre-market. And I said, but wait a second. If we're really correcting, this is more of a Q trade and we have to take some money off the table. So yes, Scott, I'm holding them, but when they're bouncing 2 or 3, I'm taking some off, because if we're having a rolling correction, they get to everything. Same way they did Amazon today. So it's kind of the way I'm buying, but I'm constantly trimming whenever they bounce, because let's face it, Amazon's not going to 200 if NVIDIA's going to 120. They're all tied together to some.
Okay, all right. So JR, I'll throw it. So JR, I feel like every time I talk to you this whole year, you've been bullish pretty much all the way through from every conversation we've had. Is anything different?
No, I mean, great call by Scott. Obviously, the NVIDIA was overbought. There's a reason he's the chief strategic officer. Excellent call. It was technically overbought. You know, as a technician, I don't see anything problematic with the chart. It needs to pull back, and I'm very much looking forward to trading it. It continues to be the gift that keeps on giving. I don't really care what NVIDIA does as long as it moves and it's extraordinary. Whether it's extraordinary to the upside or the downside, as a trader, I could care less. You got a beautiful scalp off the 60-minute and the 15-minute lows today, right back to the closing pivot, and a beautiful short reversal. We played both today. So as long as NVIDIA keeps on putting in extraordinary moves in either direction, I'm going to continue to trade it actively. If you look at the daily and the weekly chart, I mean, this thing hasn't even come into the 21 EMA. So, you know, there's a tremendous amount of opportunity in NVIDIA left in both directions, and I look forward to the dip buying in short order. It probably has some more room to the downside here, but we'll see what happens.
Okay, all right. So, speaking of NVIDIA, why don't we move on to the AI stock boom? So, Sami, I know you've been in NVIDIA SMCI in Strategic Swing Trader this year, and I know you watch a lot of small caps, but what are you seeing with NVIDIA specifically, and then the sort of related names like SMH, SMCI, et cetera, et cetera?
Yeah, I think I liked what David said about probably for now the semis topped. Because they went climactic, right? But there are a few names that still look good, especially SMCI, actually. It looks good. So I don't think we're going to have a total crash in the semis. And I think some of the names look good, especially the SMCI. AMD looks okay, I think also. So, yeah, I think we have the top end, but some of the names still look okay.
Okay. All right. So, Scott, we'll bounce back to you. So, so you're the man of the hour with the big call yesterday saying they're overheated. Are there like downside levels that could indicate like a real problem with, say, an NVIDIA or SMCH?
Well, I think everyone just added a lot of great value. Like what Dave said makes sense. You know, you had some of the leaders come in, and a name like AMD ignited yesterday. There was a fast, great trade there where you could have made good money and then kept a portion, now traded around it. Chances are maybe AMD will outperform for a little while some of the leaders come in. I would think that NVIDIA is going to hit like just off my 118 to 120. Before you need to think about putting longer term money to work, that's probably a spot. This morning, there was an active trade, like JR said. You know, you could have bought NVIDIA in the first 60 minutes below 126, which a lot of us did. And then you could have reshorted when it went to the prior low of 129. So as long as they trade well and trade by the rules, it doesn't really matter where they go if you trade for a living like all we do. So you combine all these type of strategies and all these type of ways to approach the tape. And there's a lot of money out there, whether you're a bull, a bear, you like a stock, you don't like a stock. There's strategies and tactics to do. You know, at this point, again, it was overheated. Some names trade better than others. Like SMCI is hard to trade. So when it's in no man's land, you don't want to do it. To me, it has to be perfect. There was a perfect setup a week and a half ago when it cleared 805. And then there was almost a perfect short when it went to 1,014 and couldn't hold the prior high. And now it just feels like it needs time. Like love it and leave it. You know, we all went to college. That's what we did in college. You can't do that when you're married anymore. But you know, now that you're, you know, it's in a price discovery phase where you can make some money buying an extreme dip versus a level. You could create some money. You could short it and go back and forth until there is a more defined spot that can create a real pivot area. And I don't think that's going to happen for the semis for a while. So it's a different type of trade. We're not going to be seeing higher lows and higher highs and new all-time highs in some of these semis for a while. But there are things to think about. Like think about Broadcom, AVGO is at 1850. It's pulled back towards, it pulled back towards 1685. So it's about 170 points almost off the highs. If you remember with NVIDIA went to 1250, pulled back to about, I don't know, almost 1800, and then gave you a move back through 2500 to not since 1250 to almost 1400. So I think like AVGO that hasn't split yet is a different trade than NVIDIA. So, you know, we're looking at AVGO where if this thing can come to 1650-ish, maybe the high is 1850. You go out a week after the split and you start buying some calls, anticipating maybe a better action in July and August. But then when it confirms it, you add to it. Same way post split in the video. You remember, it was 125, 120, which was 1250. You could have bought post split at 117, 118, and then it went to 140. So, it's setting up the mind frame for whatever the trade is you're looking for. And not all stocks are created equal. But as a sector, if the semis are going to come lower, it might be hard for the market to have extreme traction to the upside, but there could be reversion to the mean type trades and money can rotate like we are. I am focused on an Amazon, but today I did not buy Amazon up 2, but I was buying it all day yesterday. So you have to know, what type of stock it is, what it's doing. And at some point in my head, I think Amazon will be 200, but is it going to be by July 5th or is it going to be, September 21st? That's our job to figure out watching it trade.
Okay. All right, guys, let us know in the chat. What was your best trade of the week? Just pop it down in there. Let us know what you've been trading, what you've been active in. Okay. So David, I want to switch gears with you for a second, because we talked about, big topic out there is this sort of outperformance of the semis. So I popped a chart on the screen showing the semis are up huge, the SPYs are in the middle, and IWM has just been wrecked. And I feel like there's a lot of people out there almost feel like they're praying for IWM to snap back. Like, Do you think that ever happens, or at least anytime soon?
Ever, yes, but when, I don't know. All the right things are actually clicking for it, and it's still not clicking, right? We've had a series of numbers that were soft enough that it should have woken up. I think what people are now concerned about, if there's a slowdown, these companies aren't going to perform. So yeah, rates may go lower, but are these companies going to do well? So my answer is, I honestly don't know, but I'm sick of guessing. So there'll be a moment in time where either price action or fundamental news, like we're right at a rate cut and we see consecutive rate cuts and it'll be bullish enough for it that I'll care. Right now, I'm not going to even guess. I'm not smart enough to, because the fundamental news flow is too complicated, meaning we're not getting the rate cuts, but we're slowing down. Will there be enough rate cuts? And if there are rate cuts too quickly, does that mean the economy is too slow, that small companies that aren't cash flowing, that don't have a lot of profitability, maybe aren't going to perform well? So I'm sick of what I tell people is the whole game that we do is understanding where to focus. That's like the whole game, right? Because you can't make money if you're not focused on the right stuff. So all I know is I don't focus there. There'll be a moment, but I've learned the hard way. There are times to focus and times not. The way it's not responding to the news, I'm not focused there. It'll happen. I don't know. Probably as we get closer to an actual rate cut.
Let me just add one thing to that he's 100% right. Like, you hear all this stuff in the media about, the S&P is making all-time highs, but it's 8 stocks or 10 stocks or 12 stocks. As a trader, it's our job to find those 12 stocks and figure out which ones are the best, which are about to break out higher, what's trading well, and that's where we focus. That's how we make our money. I don't think I've traded the IWM in a month. 2 months ago, when we were at those inflection points or something, the IWMs were awesome. As soon as you had the soft CPI and they sold the IWMs into strength, I think Dave and a lot of us were like, all right, this is not even worth our time. Let's stick with what's working so we can know how it feels and whatnot, because the semis were still working well. Some mega cap was still working well. But then you also don't want to leave it when it's looking toppy, because a lot more people made money short the semis yesterday because they knew what they were looking for, because it was their babies. They've been watching it and they know it, versus jumping around. If you're buying something because something is great and the other one thinks it might happen, if you're always looking for the second, third, or fourth tier stock and not trading the true leader of what's in play, you're always going to be chasing your tail. And right now, the small caps are just, they're just, you glance at them, but you don't focus on them, and then when the next group works, we go with it. Like we milked the hell out of Apple years ago. We milked the hell out of Apple with Tesla 2 years ago. And now that's only a glance. And now we pretty much milked the hell out of the semis. And now the question is, what will they provide for us in the third or the fourth quarter? And as traders, you don't really know. But as you have the market or price discovery, you wait and see. And then when the next thing starts to go, who knows? Maybe finally Bitcoin will wake up in the fall and you'll get a really big move, above 71 to 90,000. But if you've been focused on Bitcoin the last 6 weeks and nothing else, you probably want to jump off a cliff. But, so it's just, as traders, you only have so much real estate on your screen. So you want to focus what's working and think about what might work next, but that's not where your energy is.
Okay. All right. So let's talk about Bitcoin. So Sami, I know what Sami's doing right now. Sami is always trading when I'm in the middle of a conversation with him. I find it very rude. Sami, please stop trading. I don't care.
It's what we do.
I don't care if you're losing money. Okay. So Sami, we talk about Bitcoin almost every week, and Sami's been trading Bitcoin. I think he actually bought Bitcoin from somebody in a parking lot like 10 years ago or something. But
12 years ago, actually, 12 years ago.
Hopefully, what was her name? No.
Okay, so Sami, what do you think of Bitcoin here?
So I day trade Bitcoin, but I also have a core position that's actually staked, meaning I can't get out of it even if I wanted to, because I'm earning interest by staking the position. So I trade the swings in it, but I also, again, have that longer term position. I think Bitcoin would be amazing. Not that I actually wanted to, but it'd be amazing if it dropped to like 60,000, maybe even 58. That would be like an amazing spot to load up on Bitcoin. Again, it actually hurt me if it were to drop to like 58 or 60, but that would be a really good spot, I think, for an entry into a longer term position. So right now it looks higher to maybe 64,500 or so, I think, on Bitcoin. Looks good. I'm looking at it right now. But I don't think that's the bottom. Also, Ethereum looks better than Bitcoin, especially on the weekly chart. It looks really, really good. So yeah, it's not just Bitcoin. There's a bunch of altcoins. There's Solana also is even more extended to the downside. So I like it a lot. So again, I trade them, but I also, have a core position in some of them, not all of them. So yeah, it's all good.
Okay, all right. So JR, I want to throw a little bit of a curveball at you, because we talked about small caps before. Those are somewhat rate dependent. So lots of debate over what the Fed is going to do. Do you think a rate cut would actually be bullish for the market?
I don't. Other than war with Russia and China, I'm not sure what would be bearish for the market. This market wants to go higher,
and nothing can stop it. It's just war.
I mean, we're going to chop around. We're going to, bring up a weekly chart of the SPX. Pretend it's a 2-minute chart. Okay. And just look at the levels.
I like that. You are a bold. Doesn't look bad at all.
Yeah. Look, regarding the IWM, I tell my traders in the room all the time. Okay. Pretend the instrument you're looking at is a spaghetti western. Okay. Is it wider but the OK Corral with every single eyeball in town looking at it? Or is it Wyatt Earp washing his socks in the back? Okay. I always tell my traders, focus on what's interesting technically. Focus on what's interesting in terms of the story and the sector. Okay. And if it's truly outstanding, if it's not a day in the life of, but a particularly interesting time, then it's in play. The IWM is really, to me, is dead money until it does something unusual. Technically, I'm not sure that a rate cut's going to do it. A lot of small caps are in pain. They're struggling. And if you look at the IWM, it's been in a range since December of 2023. There's just nothing there, in my opinion, until something special happens.
Hey, Mike, can I jump in for a minute?
Of course.
Yeah, I actually think it would be bearish for the market when the Fed cuts rates, because the market has been moving up for so long, so much in anticipation of that event. So once the event happens, that's the time to sell. It's like when Tesla unveiled their Model 3 car. Tesla was actually on a tear for a whole month, and when they showcased the car, which was very, very well received, the Tesla stock sold off pretty hard. Why? Because the trade has come to fruition. So it's like buy the rumor, sell the news. So I actually think when the Fed finally comes around to it and reduces interest rates, cuts interest rates, I think that would be the time to actually sell, not buy. In fact, the market, we may be looking at a top right now where we are. If you look at the weekly chart of the Qs or the SPY, we have a pretty bearish reversal bar. So I think we're actually going to be lower over the next couple of weeks. Do I know whether this is going to be a long-term top or not? Hard to say. But we're up a lot and we have a reversal bar. I think that should be respected. So the thing to do would be actually right now to focus on defensive names like AT&T, which is breaking out on the longer term, the monthly chart, like 3M. Those are boring names, but those actually look pretty decent to me, as opposed to playing the high tech, high risk growth stocks. So that's what I think when it comes to interest rates and when it comes to the market right now. I think it's actually is very toppy right now, but when interest rates finally start to come down, that would probably be, you could probably mark the top long term, probably.
Okay.
Can I add to that for a second, Michael?
Of course.
I think the market's a little overly obsessed with rate cuts, and I think people aren't zooming out enough. We're looking at almost a decade and a half of quantitative easing that needs to unravel as our economy retools for completely remodeling the supply chains and completely changing our workforce. And you add AI to that mix. Obviously, the cost of money is a huge component of that, but the obsession with the causality of rates, I think, is over exaggerated. I think the bigger challenge, in my opinion, is retooling markets and economies after, what was it? I guess you could say 12 or 15 years, depending on how you count, of excessive quantitative easing. That's the real challenge the Fed and businesses are facing today. And it's a much longer term challenge. It's much harder to navigate than simple rate cuts and final fund rates. That's my 2 cents.
Okay. All right. So I think this is a good transition to sort of talking about mindset and the things people can actually control in their trading. So David, I'll throw it to you. Do people think too much about these external issues like the Fed, the economy, et cetera, rather than what they do control, as in their own actions?
So I'm going to try and simplify this and make it a little bit less macro and more exciting. Are we speaking as investors, or this is like a trading show, right? I'm not putting my fund hat here on. We're just talking about trading.
You can answer it either way.
All right, because I just want to clarify things. Yep. So volatility is your average trader spread, right? So as we opine about rates and this and that, first off, I want to say a buddy of mine, Keith Meister, was on CNBC yesterday, and he said it really simply. It's going to be why they cut rates. If they have to cut rates because all of a sudden subprime's really in trouble, and not only are we slowing down, but we're having an epic slowdown where jobless claims go like bananas and there's an issue, then we're going to go simply down, not because it's a sell the news situation, but it's going to be because the economy is in trouble. And that's not such a great thing. So, cutting rates won't help right away. And then the other thing that I wanted to say is when we have this volatility, we almost don't have to think as much, right? So like Scott said it well, I don't trade like these guys about the 60-minute stuff because I take a bit more risk because I'm not like just setting a stop. But today, literally in the morning, I just like, this is actually what I've done the past 2 days. And I think if we utilize this volatility, there's a ton to do. Like I've had 2 of the most amazing days because volatility can be our friend. So yesterday, you have a stock like ARM, you can short it, right? You have a 20-point down move. I covered way too soon. Then you can buy AMD, actually capture 9 points. I bought Q puts when I sensed we were going to really break that previous pivot low from the Tuesday before, and they went up like 200%. And then today you get this flash open in NVIDIA at 126, and we're able to sell a few minutes later at 129, and it went as high as 130 if you held it back and forth. And I'm thinking a trader should be just using this volatility, put on your trading cap, and recognize it's not maybe the most optimal time to invest, regardless of what happens with interest rates. The markets come far, whether it's the S&P PE, whether it's what's happened to some of these AI names, unlike NVIDIA, that maybe can't back up the size of the move, whether or not it's that we're not getting 7 rate cuts and it's just one. There's a multitude of reasons to say, you know what? Investing may not be perfect up here. We need a larger pullback. Remember, it was just 2 months ago where the Qs pulled back from 450-ish to 413. So that can happen again because we're kind of pricey up here. So my point is, I don't worry so much about this stuff. The reasons, how, why, because hell, we can literally short a stock, make 20 points the same day, buy an AMD. Scott and I are obviously on the same page looking at Amazon as a potential breakout and be able to hedge yourselves and buy puts in the queue. So I find this volatility a welcome. Just these slow moves up that go up with no pullbacks, that becomes difficult. That's the environment I find difficult because it's hard to hedge. You can't really make money unless you're just full long. So I think if you understand levels, this is where, like guys like Scott and JR, I think they thrive because use your charts. Like charts really matter in this environment. So I remember this morning, literally, I didn't do all my days. I said, okay, MU goes to 136. That should be buyable. By the way, Broadcom, I'm going to buy if it gets to, I said, where's it now? 60. I said 1682-ish. It's a buy. I was a bit late in buying it, about 1688. It bounced to like 1705. I sold most. So when you get these size moves, and you know that the S&P is expensive, and you know we might only get 1 rate cut, and you know that people are late on their credit card payments, maybe it's time to just be a trader and wait for levels where things actually make sense on both a trading level and an investing level. In terms of how many rate cuts we get and whether we go down or up, I think there's a chance the economy is going to be in bad shape. We're going to have a series of rate cuts, and it's not going to be for the right reasons. And we might pay the piper, and the market might actually go down before it goes up.
Okay, I'll throw the question out to the audience. Would a rate cut be bullish? And we're talking like S&P 500 Qs. Type yes or no in the chat. Would a rate cut be bullish? Give us a yes or no. We're just curious about what everybody means. So, Sami, I'm going to unmute you. I see you muted your mic like a very nice, polite person.
But
Sorry,
by the way,
Scott?
yeah, just while they're doing that, it's such an unfair question. Where are we when they do a rate cut? Is it September? Are we at all-time highs? Did we pull back 5% off the highs because bad news is coming in?
It's like an earnings report. Couldn't agree more.
It's like it's such a bad question. I'm sorry, I love you, Mike. And
yeah,
all, but
fire Michael out of here, bro. But he's right. It's
if
where
you
the
think-
pricing. Where are we in the market?
when is the rate cut? Is it going to be September? Is it in December? And like Dave said, why is it happening? Is it happening because economic news is weakening and now bad news isn't good news anymore, and we pull back 5-6% off the highs? Then maybe a rate cut will go up. If they do a rate cut and we're at all-time highs, chances are, like Sami said, it might be priced in. They might sell the news the same way when we caught bin Laden. It was the best news in the world when we killed him, and they sold the market down for a year. So it all depends on where and what these things happen. We're not the media. In the media, they need to create a narrative around the stock auction. They need something to fill all day long. So they'll talk about the rate cuts, and they'll talk about this, and they'll talk about that. As traders, we need to know how things react. Are we still going up on bad news, or are we going to start going up on good news? What's the obsession? And then when the obsession changes, we got to find out what the next obsession is. And right now, the semis did lead the market higher. Now they're probably in some kind of new pack and fill base building thing. What could be next? Energy gave us a little bit of a rally, not a great rally early in the week. We all talked about buying the XLE for some type of rebalance. It happened. Is that just a trade or is it a new sequence? There's a lot that's going to go on after July 4th. Once the rebalance is done, once new flows come in, and then we have to figure out where's the next spot we could all live and make money with, if, depending on our style. But chances are it's all about, the whole rate cuts thing is why is it happening and when is it going to happen and where's the market at the time so we know how to react then. In my humble opinion.
Right. Okay. So I'm going to flip things back on Scott right now. So why was that a bad question? Because I know when there are...
we're not going to really fire you. You don't have to protect your job.
No. Hold on. But no, because the media does always want, like, I want a bull over here and a bear over there, and I want them to have opposite opinions and babble at each other for 60 seconds. So, Scott, why are questions like that bad questions?
Because they're not relevant right now, because they're not cutting rates right now. There's a 70% chance that they could cut rates in September. That's September. Right now, it's June 21st. Right now, we had a short-term peak in the market. Where are we going to find the pivot low? What sectors are going to perform better? What's going to still be pressured? How do we make money? So right now, the rate cut question is not what's controlling the tape right now. It's a question for another time. That's all I'm saying.
I just want to touch upon that. Can I do that for 1 sec, Mike?
Of course.
Because it's a really simple example. Micron reports next week, which is, by the way, relevant to the conversation in semis, and fully based on memory pricing and what I'm seeing with, NVIDIA, clearly they're going to have a really strong quarter. Be shocked if they didn't have a strong quarter and strong guide. And someone said yesterday, and I was a big bull on it at like 107 to 113 and rode it a long way. Anyway, my point is, someone said, so how do you feel about Micron on earnings? And I'm like, tell me where it closes before Wednesday when it reports, because literally that'll decipher whether you can play it for earnings. It is literally going to, and this market's been that way, right? We've been riding a wall of worry. So what the market, remember NVIDIA that day it had earnings actually went down. It gave us a buy because it closed near highs. A couple earnings ago, my point is what we're pricing in for when that moment comes is, like Scott says, that determines everything. If the market has been just ripping nonstop and we're making new highs, and rate cuts come at a time where they signal the market, the economy is in really bad shape, we're probably going lower for a multitude of reasons. So where we are is so much about how you position right now, right? Whether it be for earnings, whether it be for a rate cut. That's everything right now.
Right, like right now, Micron, like you said, it's Friday, Micron's Wednesday. There's a lot of time and space. Is Micron going to be at 130 going into earnings? So if they do come out great, maybe it could bounce. If it was at all times and it was good earnings but not fantastic earnings, it would probably sell off on it. So it's all a matter of where it is when the event happens and what's priced in and what's not priced in. So it's more like trading where we are in the moment. But sometimes you have to anticipate also. Listen, I get it. Sometimes 2 weeks out, Dave's also the king of that, where it's like, will it run into the numbers? And if it does prior to the numbers, then it doesn't make sense to take it into the numbers because
my favorite
the trade's
trade,
a lot tougher.
Or you take options, you take your risk off, and now you play with the house's money.
Okay. All right. So things get a little heated. So let's try to take the temperature down a little bit. Okay. All right. So let's move on from sort of the current market environment and let's talk about like what things people can actually do better. And then everybody's going to share their favorite ideas very quickly at the end. So Sami's trained thousands of traders. He's run our mentorships. He's taught like the entire universe at this point. What is one thing people can do differently? And I'll also say this to everybody right now. If you think this is also a bad question, we can talk about that too. So Sami, which I actually think is an important topic, but so Sami, what do you think people can do differently to become better traders?
A lot of things, but basically the single most important thing is to focus on what's on the process, on what you do day to day, and not be focused on the result. That's like probably the single most important thing. So you have to be focused on figuring out a routine, something that you can do day in and day out, and then not worry so much about the result, not be attached to a certain result. There's so many, I could go on and on and on about what we could do differently, but that to me is like probably the single most important thing.
Okay. Same question to you, Scott. What do you think people should do different?
I'm going to speed it along. Sami just said it. I just think it's about your routine and your process. How prepared are you for the day? How mentally sane are you to execute on your X's and O's? You could be prepared and shit's going on in your life and you can't execute because you're not thinking straight, or you could be thinking great, coming late and you have no idea the levels, no idea what's in play, no idea what's happening. So to me, it's trading is not a get rich quick scheme. It's a preparation. I call it a blue collar job. And people are like, what do you mean it's a blue collar job? We're not digging ditches and laying, aluminum on buildings. But again, you're in every single day. Every single day, you have a process and a routine. You got to do it every day. You got to make yourself happy. How do you do that? You listen to music. You do fitness. You keep yourself in a great environment. You have things around you that you like. And chances are, if you're in a position like that, you're going to be able to execute and see things clearly. If you don't put yourself in a position where you're set up, you're planned, and you have multiple scenarios in your head thought about prior, you're never going to be able to execute when things start moving around. And just be honest with yourself. Look at your trading. Look how many times you screw up in the course of a day and give back money that you're not supposed to. And also maybe even look at your prop report so you could see what you do well and what you don't do well. You might have a really false illusion of how good you are as a trader, long or short, until you really see the numbers. You might think you're the best NVIDIA trader in the world out there, and then you look at your last 3 months and be like, I'm not that good. So typically the market never sucks. It's how you approach it and what are you doing wrong. And if you could fix and take accountability of what you're doing wrong, chances are no matter what the market is, it doesn't suck. Sometimes it's easier than others, but it's more or less your approach to it and how you're handling things, which sucks. So it's really the person, not the market, on whether or not you can make money or not.
Okay. All right. So JR, same question to you. What do you think people can do different?
Sami said the thing I focused with my traders the most is really being a keen observer of the market. The market is universally has a lot of set truths and corollaries, but it has different stages and phases of the price cycle. Back in September, we were going balls to the walls, buying the October and November lows into the point of control. Right, that was an area of high liquidity, and we're expecting a break of highs. Now we're near a distribution top, a short-term distribution top in the SPX, in my opinion, and that's a different type of trade that requires a different approach. So what I constantly tell my traders is to really adapt to the personality and dynamics of that particular market, right? And be a keen observer of the markets. We had a rebalancing trade today where they've been smacking Apple down and some of the other mega cap techs in advance of the rebalance. So what did we do this morning? Very early in the morning, I bought the snot out of Google, Amazon, Apple, and Microsoft. Why? Because I was expecting those to bounce, right? Those are just, some people call them dirty tricks, other people call them just basic market common sense. So become a keen observer of the market, be prepared, and adjust to the personality of the market you're trading and the phase of the price cycle we're trading, right? Trading a markup is really different than trading a digestive move or a distribution top. So you should retool your trading approach and adjust your game plan to trade the environment you're in.
Okay, guys. All right. So I can tell everybody's
I didn't
itching.
get to answer. What the hell?
Okay. Oh, David, I was actually going to move to the final question about favorite idea.
No, but I have a better answer.
You talk too much, David. That's why. You and Scott hogged the mic too much.
All right. Go.
Shots
the
fired.
Chief Strategic Officer, fellas.
Okay, David, let us know.
I'm not part of T3, so I'm just going to speak my mind. Here's what I think, right? I think there's two things, and I really feel strongly about this, so I'm going to say it. For anyone that's in the business 5-10 years and you don't hold overnight and you're more a day trader, preparation, literally preparation. Like I knew my whole day by 8:30, right? But then and literally like if X happens, do Y. If Y happens, do Z. And it's all about preparation. Guys who come in at 9:15 should be shot and feathered and get out of the business. Okay, now the other part I wanted to speak on is then it's the guys who've been on for 10 years. Do you know how you make real money in the business? I know Scott personally, so I know he knows how. It's not by being a great trader every day. It's by actually getting to know and learn about companies and expanding your mind so you can actually hold one of them and make real money. And there is a lack of kind of interest in educating yourselves. So the guy who educated themselves on NVIDIA and held it the last 1,000 points changed their life. The guy who listened to me on Immunome when it was 7 before it went to 30 changed their life, like many of them. The people that bought Amazon earlier in the year who believed in Angie Jassy changed their life. My point is, there's a lack of education. The guys who actually read and understand and looked at the numbers on SMCI like I did when it was 300 and said, this thing is cheap at 14 times earnings, and their racks are all about NVIDIA. And if you want to kill it, you got to buy something and hold it for more than a day or a week or a month. And you know how that comes about? By educating yourself on what you own so you're comfortable owning it even when it pulls back. So I stress that if you're in the business for more than 2 minutes and you're not just a day trader, please educate yourself. Take 5 minutes. It's so easy. And that's how you have fortitude to hold stocks or buy NVIDIA. I'm not showing off. I'm just saying. I bought NVIDIA when it broke down under 800. The charts said wait till 700. I didn't give a damn because I actually, even though I'm not the brightest guy, understood what they did, their earnings power, and said I'll buy more if it goes to 700. So if you can educate yourself about what price to sales is, PE is, what a trend is, what actually it involves beyond just price and chart, you'll take yourself to the next level. Not enough people talk about that. Sorry, but I felt strongly on it.
No, let me expand on that for Dave. But that's also, there's a time and place for that. You know,
that's why I just said 10 years and beyond.
Yeah,
and
10 years plus. Listen, I talk about it now, like you have to be your own portfolio manager. The only way you're going to survive now in the stock market, if you've been doing this for 10 years, is not by being a scalper, not by being a day trade only, not by being a one-trick pony, because the computers are rigged against you. You have to be able to say, hey, I have this amount of buying power. This is my process. And you have to know when it's time to put risk on, where's the best place to put risk on, how to, massage it, to book some money, stay with things, book some money, stay with things. And then all of a sudden you can stay with the stock for 2 months. But again, if you're 22 to 25 and you have a small account and
you don't have to think about any of that. You're right.
But if you're 10 plus years in the business, like most of us are, you got to do things a little differently, and you have to educate yourself, and you have to be a mini portfolio manager. And whether you have $2 million and you want to have some options, you want to have an active, a swing, and a box, or you have 10 million or you have 20 million, you have to know how you think. But the way you're going to make real money is by not just scalping cash flow, which is good to do because everyone does it, and it's fun. It's a lot of fun when it's working.
Pays the bills. Yeah.
But it's understanding, because sometimes you have a great idea in a crap market and you can't handle it and you can get stopped out of a position before you're right. Or you think something's crazy overvalued. You see that too. But the days of just scalping and thinking you're going to be a trader in this job for a long term and raise a family, we don't
have that volatility anymore, that up and down. While last thing, what he said is literally my AM call this morning was, I want you guys to think of yourselves as portfolio managers, not traders. And that's really how to make money in this market, because we don't have the same volatility. I'll shut up now.
Really? That's possible, David?
How David came into business. By the way, just David is a portfolio manager, and he did a lot of deals, and that's how he made fortunes. But in between deals, he needed to learn how to pass time away. So passing time away, he learned technicals and learned how to trade the market. So he did something different. He went from big picture to micro to pass time away, where a lot of us started off at day tech or Broadway trading. We were micro traders trying to make 1,000 a day or 5,000 a day. And we've tried to grow into being a portfolio manager. So he went from portfolio manager to technician and met in the middle if we started as scalper technicians, we're trying to come up to here. So you got to meet in the middle somewhere, and it takes time, effort, and a process. It's just a matter of, doing it in a way that you could last and have staying power.
Okay, so I threw the question out to the chat. Should we do these events, more events like this? We're getting yeses across the board. People seem pretty happy. So we will consider doing another one of these. JJ Dynamite, who I know who this guy is, says these guys are a great crew. Okay, all right. So time for the final question, because we have to get everybody back to trading. We have over 3,000 people watching across all our platforms. So thank you, everybody, for joining us. So, JR, we will start with you. What is your favorite name right now? And you can name any time frame you want. JR, you are muted.
You're muted.
I am muted. Sorry, I do that at least once a day. It's a Momentum Express tradition. Oftentimes I'll go 20 minutes drawing on my charts and people are like, JR, wake up, JR, you're muted. So you guys got off cheap. Well, I need the market to come in. I really like the impending breakout in Amazon through 188. It's a shorter term trend type of breakout idea through 200. Google looks like it's going to wake up. I don't have any trade ideas I love at the moment personally.
Okay, all right. So, David, back to you. What do you like right now?
Short term, I got to give a short long. I don't like the market here. I don't think there's a lot you can invest in. If you can be down 20%, two of my favorite names that are very risk driven, that are investments, they're not trades, are Immunome, who the CEO is the guy who sold Seagen to Pfizer at $12. Thing's been destroyed from recent 30 where we were selling. I think if you look out 2-3 years, you'll name your children after me. And I think Enphase, we saw horrible numbers in the solar space. So I think if you look out a year or two, I think they have earnings power as soon as we get some rate cuts. But not on, I don't buy them actively near term. Near term, right now it's Amazon and AMD to me that I think might outperform in the tech space. I see the Dow trying to show its head and obviously lead us the past couple of days, but I'm not that excited about Caterpillar or anything. So I'd love to see the Amazon breakout. I've been talking about it all year, saying Jassy's my hero, and I see 2 to 212. So short term, Amazon, AMD on dips, and I really don't like the market. I think there's more risk than reward here. So I'd say the next 5% in the Qs and Dow is actually low.
Okay, Sami, what about you? What do you like here?
I'm sharing my charts. Do you guys see them?
Hold on. Yeah, I'll bring them up. Oh,
I see a naked girl. I'm not trying to be funny. Is that? Oh, okay.
David, do you really want to speak some more? I can give you the mic. No. Get back on, please. My Lord. All right. So here's what I like. So you want unsexy stocks? Come to me, baby. AT&T. Love it on the monthly, like it as a long-term play. Okay? It's breaking that long-term monthly downtrend, and it pays 6.5% dividend. I also like 3M, also in a long-term downtrend that seems to be ending the downtrend and transitioning higher. So those are totally unsexy plays that I like long-term. From the Magnificent 7 or 6, I guess, I like Goog a lot, and I like Amazon a lot, right? Those are the top two, I think, from the Magnificent 7. If you want something that is a little more sexy, I would say Robinhood. I like a lot. As you know, Mike, it's a play in the newsletter. I have 2 positions in it. So I like Robinhood long-term as well. And it should move up as soon as Bitcoin also finds the bottom. If from the China stocks, I like Billy the most. It's also breaking out on the monthly chart. So that looks good to me from the China stocks. Real estate, I like Zillow, which is a monthly buy setup. It may need a little bit more time before it gets going, but you see the monthly chart. So I like Zillow from the real estate. I actually like eBay as well, believe it or not. eBay looks pretty good. Look at the bullish weekly base. The monthly is looking good. I think eBay goes higher. And then one more, I would say, this is short term, but it looks pretty good too, is the Stitch Fix. Look at the weekly on the Stitch Fix. Looks higher for one pop, I would say. Maybe gets to 5 on the Stitch Fix. So that one looks good. And if you want one more, because I'm never short for ideas, I kind of like the 20-year treasuries, the TLT, but I would do that. I do it with the leveraged TMF, because if you look at the TLT, we have basically, look at the monthly chart of the TLT, we had a drop to all-time low. This is all-time low at support. We played it last year in the newsletter, in the SST newsletter, bounced really hard, and now it's putting in a higher low. So I like the 20-year treasuries, the TLT, but I usually play the TLT with the TMF. Again, look at the big drop all the way down to support from the early 2000s. So, and we have a higher low, went climactic into that area, played it 3-4 times last year, and now on the higher low. So lots of ideas. It just depends on what you want. You want stable, unsexy AT&T or 3M. You want something that's probably going to move quick, Stitch Fix. You want Bitcoin related, Robinhood. You want China exposure, Billy. You want something that is not quite ready but looks interesting. I would say Tesla, because it has that battle bar on the weekly chart. So it just needs to take out that weekly bar's high. So it's not quite ready. So it just depends on what you're in the mood for. So there's lots and lots of ideas all the time.
Sami,
and it's short. And it's short. ANF.
Oh, God.
We shorted a
Can I
couple
say
days
something?
ago. We
Sami,
shorted
why
a
are you
couple
so
days ago in
stingy?
the newsletter.
Can I say something?
No, Scott, you've said enough. Mike, what were you gonna say?
Sami, who's hogging the mic now? I asked Sami for his favorite idea, and he gave me like 3 issues of Barron's at once.
About time.
Okay, all right.
Scott had something to say.
No, I was going to say, Sami, how do I subscribe to your service? It seems like you have a lot of great ideas across the board. How do we do that?
T3live.com/Sami, I think.
T3live.com/swing. Okay, so we're going to see. Okay, so far I've asked 4 traders for their favorite idea, and everybody's failed. I've either got no ideas or I got 28 ideas. So Scott, what's your favorite idea here?
Again, that's a tough question to ask traders, because right now it's 331. We have a rebalance coming in at 350. I have no idea if the Apple sell imbalance is done, if NVIDIA switched from a buy to a sell. So for me, though, I'm watching Apple and NVIDIA into the close. If they could sell down NVIDIA, because everyone thinks it's a buy, but I'm hearing from Goldman guys it's been a sell all day, I'll buy some options into the close if it gets low enough. Same thing with Apple. Apple usually is a sell, and it's been a sell all week. If there's no sell imbalance, I might buy it for a trade. At this point, there's no favorite idea, because we're in that kind of scalping tape where the market probably put its high in the S&P, the semis probably put its high in, and now it's just about the setup, the trade, and what's happening. As far as Amazon, I do as a swing trade think it's something I loaded up on the 192.50s for July 5th. So if you want to play, that could work out very well. If it ignites and goes and catches, I bought the 192.50s for July 5th. That gives you 2 weeks for Amazon to actually get above 189, hold it, and then take out 191. You could trade it. And if you don't want to overtrade it and screw it up, because there were guys who were buying Amazon the first half an hour of the day thinking it was going to go, and then it went red and they puked it out and they lost money, and Amazon still is fine. That means you just executed wrong. If you want a swing position, I do think 192 halves for Amazon. If it's a real breakout, I think by July 5th, you're going to have a really nice gain. If it doesn't work, that type of trade might happen in a few months from now. But other than that, it's hard to give you real tactics right now, because it's 332. You have no idea what kind of imbalance is going to show up at 350. You just have to have multiple scenarios in your head. And the ones I'm going to be watching the most are NVIDIA, Apple, Amazon, and even Tesla. I like Sami's idea on Tesla. I actually bought the 192.50s in Tesla. I went out to July 5th also, just in case the bulls win for some reason. I don't know why. And it resolves that weekly channel to the upside. So, I have the Actually, that's kind of cute. 192 have calls for July 5th for Amazon and for NVIDIA. So not NVIDIA, for Tesla, which are swing trades. If they work, I'll also probably pound into them. But if it's hard to trade, the stress is off by owning the options because risk is premium paid.
Oh, okay. All right. I think that's going to close us out. I can see Scott's itching to get back to the trade. So I'm going to crown Sami as the champion for today. He won 2 truths and a lie. He also gave by far the most ideas. So I am crowning Sami the champion for today's event. So let us know in the chat if you want us to do this again. We had a lot of fun. We learned a lot. And
I think we should do this more often. I think one day we should do a collaboration VTF day where all 5 of us are on a VTF all day long, and we actually all make each other money, because when our ideas line up, you better swing that bat harder than you've ever swung it before, because not all times you get pros like this that come together on an idea, and when they trigger and go, boom, that's how you make money for the quarter, and that's how you make bigger money. We all used to be on the same VTF at one point, and now we all run our own. I think running our own is great, but I think at some point we should do something to the fact where we all combine, whether it's a day a week or maybe 1 week a month, where we all hang out together for a week. I'm just thinking, I just came to me for one week a month, we all collaborate together and everyone gets to see everyone's style. We all make good money, and then everyone maybe either joins each other's or goes back to where they live. But that's just a thought.
okay. All right. I think that is an interesting idea. Put everybody
1 week a month. I would benefit from listening to all 3 of you guys all day long, and whenever we all combine together, I know I would put more size on.
Hey, Sami, would it be okay if I said something right now that's pertinent? Okay. I just wanted to make sure. I think a lot of people, it's not that funny. So I think a lot of people can learn from what Scott just did. I know Scott well, and his humility is it's what makes him a good trader and why he makes a good living. So I'm happy Sami is letting me speak. Humility, you asked about what traders can do. They can be humble. They can keep learning. And Scott's a great example of that right now. So I just thought I'd say it.
Okay. All right. Any final words, anyone?
All right. I think it's 3:35. We got to cruise.
All right. I'm closing out. Okay. Party's over. Guys, if you want Scott's free ebook, t3live.com/show, t3live.com/show. Have a wonderful afternoon.
Take care, guys.